So welcome back to my YouTube channel. So if we look from Monday this week, market started, but on Monday there was nothing like a liquidity grab. There was a one small liquidity grab on this euro dollar, okay, but it was not that much clear then, and it was not making a higher highs and higher lows, okay. So it was like a little bit confusing. But today on Tuesday, if you look at on euro dollar, what you look over here, so we can see that price was making higher highs and higher lows and it was going down. Then all the retail traders or all the supply and demand traders, right, they will look this as a supply zone. Yes or no? Like, because they will look at this one as a supply zone. And now, as I taught you in my previous video, and the link will be in the bio, in my previous video I taught you a strategy in which you have to do the opposite of the supply and demand traders. So if you were and see that time period, the time period is at like 2 o'clock, correct? 2 o'clock, there was a big move towards the upside like this, okay. There was a big move towards the upside, and now all the retail traders, when they will see this move, first they will be looking for sells, okay, during the London session. And then what will happen after that, price just rip through and they take their stop loss right over here, and now they can see that it is a breakout, right? So now they will look this one as a breakout and they will try to take buys on this over here at a retest, okay. But what we have to do is we have to just take the trades right over here where the stop losses will be hunted. So for example, if over here, if you can find any round psychological level, see, like from that round psychological level 1.07600, from there market just tapped into it and then it kept on falling and went down and took the previous day's low right over here, okay. So it was a straight 1:2, and you can put a 15 pip stop loss or you can do a 10 pip stop loss. But for euro dollar I prefer $15, or sometimes I use 20 pip stop loss also, okay. So now we have to take a sell over here, and our target will be another liquidity pool right over here, because now the retail traders, they might be thinking this over here, okay. They might be thinking that this is a support, and now they will see this type of move from here, okay. They saw this type of rejection candle from here, now they will be looking for buys over here. But as per our strategy, we will be looking for sells over here also in New York session. So right now we can see that there's another liquidity grab if you look at over here. So market was making higher highs and higher lows, so it was just keep on doing like this, and it was just small by small, it was going up and up like this. And then there was a big downfall, okay. And then there was another lower high, and then there's a lower low. Now lots of traders, they might be thinking this candle right over here, okay, as a supply zone, or this line as a resistance. But what price do, it just goes a little bit above that resistance like this, and then it starts to fall, okay. And that's our strategy. So we have to just take a sell a little bit above this resistance. So right over here I could have taken another sell over here and another 15 pip stop loss, okay, and my target can be 1:2 like this. But this was the normal trade. So let's like see, it's happening live right now. And now this thing happens on any time frame. If you want to see on 5 minute, you can look at on 5 minute, it's more clear, right? Because now what other people and some of the ICT or like the people, they say that they trade SMC, what they will be doing is they will think that this candle is an order block right over here, but this candle is not an order block, okay. And they will be taking buy from this fair value gap right over here, but this is not a fair value gap, okay. This is just an imbalance, okay. They will be taking from here, or they will be doing this optimal trade entry from here, which is totally wrong, okay. You have to just look for the liquidity right over here, and when the liquidity is taken, then take the trades, and otherwise you will be also end up in a loss, okay. And now this one, and if we go on 1 minute time frame, on 1 minute time frame you will get plenty of entries, okay, but you will be confused, and you should have a good psychology and risk management to trade 1 minute time frame, because it's like it can make you feel like you are gambling, okay, if you're trading on 1 minute time frame, because it will be lead you to over trading, and you can take a losses in that. So like this, if you see, okay, it was making high highs and high lows. Then this type of candle, this 2-3 candles went above this high right over here, okay, just above this candle, and you have to take sell right over here, because people will be thinking that this is a break of structure, okay. And now they will think like market will keep on going up, but it's not that case. And see, after that liquidity grab, what type of move came? Nothing, not even a single bullish candle, just one over here and one small, and all of them were red candles till over here. And it happens on every time frame. If you go on 1H, okay, look at 1H, which you can see, like, see this. Now some traders will think that this is a resistance, right? And what our strategy says that we have to take trade just a little bit above this resistance lines, because we know that their stop losses will be just sitting over here, and they have taken a sell somewhere around over here, okay. And you can see that what type of trade it gave. And so for example, if we go more back in future, and this was the scenario, and we can see that this was a point from where the market has fallen down. So now this is a this is a resistance, right? This is a resistance. And then what you can see over here that it is a liquidity run right over here, and people will be looking for sales from here. And some of the traders, they make money with support and resistance, because what they will do is they will take sell, and if they have a, like for example, they take sell from this supply zone, okay, and they take the sell and they have a big stop loss, okay, or like 50 pip stop loss or 40 pip stop loss, then they can survive this type of drawdown, and then they can get a good take profits. But most of the time people are greedy, and they will try to take a little bit smaller stop losses, and this is what will happen with them, okay. So like we have to just look for this type of liquidity runs in the market, and it happens on any time frame. So let's jump on pound. So this is a pound dollar, and it's running right now. you can see over here that price just went a little bit above this two relative equal highs, and it was a type of breakout. But what happens after that? Market is falling now, and I think so market will go below this two relative equal lows. Okay, and it started falling from this round psychological level, and it's a New York kill zone going on right now, and it just took the high of the London kill zone. Okay, and on Australian dollar, if you go on 15-minute time frame, but it was in an Asian session, you cannot jump in that. So on USD JPY, there could be an entry if market goes below this low, okay, and or can tap into this bank level right over here. And see this one, and see, this is a pure example. You can hit a stop losses also with this strategy. So some of you guys might be thinking that this is such a good strategy, we will be winning every time, but no, that's not a scenario. If price starts to consolidate like this, you will end up taking a loss. So for example, if you would have taken a sell at this round psychological level and you have a 20 pip stop loss, okay, you are still in a 50-50 situation, because you still have not taken that 1:1. Price has not gone till that 1:1. So this is what can happen with you in this type of market conditions. In this one, like, look at over here. So this is the strategy. If price would have came below this line, okay, then I would have taken the buy. But the thing is, price is just consolidating right over here, so I cannot do anything. I will just wait, and I will see that if market falls below this line, then I will take a buy. Otherwise, nothing, right? And on this gold, you can see on gold, this was a type of supply, right? This candle, or some of our traders, like those who say they trade SMC, they will think this candle as a what? They'll think this candle as a supply zone, right? Because they can see that it gave a retracement to this level and then it started falling, and it gave a market structure shift also right over here. Okay, so this is a supply zone for them, but we have to take a sell just a little bit above that supply zone, because we know that their stop losses are just right over here somewhere around, and it happens every time. And yesterday also, okay, and yesterday I took a loss on this one because I saw these two relative equal lows, okay, and I took a buy right over here, just right over here, and my stop loss was something like 30 or 40 points in this, and this was the stop loss. So you will end up taking stop losses like this also, because sometimes the breakout traders will make money, okay, because if somebody was a breakout trader and they see this breakout, they will take a sell right over here, right, and they will make some money from here by making 1:1 or 1:2. So you can take a loss in this type of scenario. But after that, if you go on 5-minute time frame right over here, we can see that market was going up from here, higher highs, higher lows, higher high, higher low, and then higher high, and now this is a lower low, right, because this candle goes below this higher low, right, like this. So over here was my entry, and I was targeting this relative equal highs, because lots of retail traders, they might be thinking that this is a resistance, okay, but what happens after that? I just took a buy right over here, and then my target was just a little bit small target, 1:2 or something, and it just went above over there and took that highs, and see after that this type of move, and market came down one more time to take this low. See if you can see, it was like a from a small pinpoint. I could have taken another buy over here, but it was like 3:15 already, so I didn't do anything because I don't overtrade. But I know that what's going to happen next, so like that's good, right? Because market only respects liquidity, right? So if you know that where are the stop losses in the market, where are the stop losses of the 90% of the people in the market, then you will be profitable, okay? And this one, and today it's going on right now, and today also in Nasdaq, if you can see this, right? This is a, what do you call it, the support, right? So this is a support line for them, okay? Now if some support and resistance trader, they take trades just at the line of that resistance, of that support, they will make money, obviously, okay? They will make money lots, they will make money from this trade. But the thing is, some of those traders, what they will do is they will mark a demand zone like this, and then they will take a buy when they will see this type of rejection from this demand zone, and they will take a buy right over here, and their stop losses will be too small because they want to make more money. That's why their stop losses is too small, and then this what will happen with them, okay? So this is the whole scenario behind the market's movement, okay? Price always goes from liquidity to liquidity, and with a higher time frame confluence, you can know that whole direction of the market, okay? If you see at the daily time frame on euro, market just went a little bit below this low, right? It's about to go below this low. So when market will go below this low right over here, I will look for buys, okay? And on this one also, euro, it was like a whole month it was consolidating, but still we made money in this consolidation because we were trading in smaller time frames, and I was not holding trades overnight, so that's why. So this is what the thing is, and I taught this strategy in my last video. I taught the whole strategy, that you have to how to point out this, and how to do a risk management, and how to take the trades, and how to put the stop losses. This was just overview on the live markets of the strategy, okay? And this is a model which is a very good model, because it can give you a sniper entry, because you only think like if you can get an entry right over here, okay? If you go on 5-minute time frame, if you can get an entry right over here, so see, like this is a sniper entry, right? And you can easily make lots of money from this. So that's why, like, this model is my favorite model, and there are lots of models which I use on high time frame, but this one is my favorite model, okay? So you guys can use it, and if you guys have any question or any doubts, you can ask me in the comment section, and I will make a video on it, because I got some questions that they want to see that in a live market. So market is live right now, okay? And I've shown you just in front of the live market. that how it's executed, and I will make a live videos also of taking trades and posting it. So if you guys have any question, just write down in the comment section and let me know, and you can DM me on Discord or Instagram if you have any questions, and let's see. So until next time, wish you good luck and be safe.